Hello everybody, welcome back to my channel. Another week, another form of opportunities. So today I'm going to show you the basics of Forex and how to really go ahead with this. A lot of people have a lot of misconceptions about how to trade Forex. So I'll be going through how I do it so that you can get a better understanding. So the first thing I do always in Forex is look at the dollar index. So the dollar index is basically, think of it like the world's best team versus all the other teams put together. So what they're doing is they're putting the dollar versus every other currency. So there's around about 5-6 currencies that are put together on the other side of the scale versus the dollar to see which is performing better. If the dollar index is going bullish, the other pairs will be going bearish, so on and so forth. So let's look at this then together. Right. So as you can see here, dollar index is known as the DXI, sorry, DXY. So quite a while ago, it was in bearish momentum, hit a particular zone, and now it's going into bullish rally. So what is this showing you is as the dollar index strengthens, all other pairs will start to weaken. So the dollar itself, okay, is performing quite well. Over the last couple of days, the dollar index just went a bit down, but the overall trend is bullish. So what that really means is that you've got to think of as the dollar as an entity of its own. When you see Forex pairs like USD Swiss franc, USD CAD, okay, you're not doing individual stuff. You're looking at the dollar as a whole and comparing it to them as how they are performing. So here, as you can see clearly, the dollar index is going forward, as it is going in bullish territory. So what this is telling me, okay, is that the other pairs, especially anything compared to the dollar, should be weakening. Okay, so let's see how this is. So this is the USD Swiss franc. Okay, so the first pair always is known as the base currency. And the second pair of the two that's been compared to will be known as the counter currency or the quote currency. If the base currency is doing well, as in is bullish, the other one will be bearish. And if the base is bearish, the other one would be bullish. It's either buying or selling. It's either one or the other, okay? So as you've seen here, in the dollar index, price is rallying. So price is rallying, so that means it's going in a good strength, okay? So let's see how this compares to here. So what you can see here is for quite some time, we've had the Swiss franc going in a downward trend. Now it's starting to change trend, as in go further up, and it's hit a particular zone. So the zone itself is here. It's gone into a bit of a range zone. So I'll just get this a bit more better for yourself. So the Swiss franc for quite some time was really the one that's basically moving everything. Even though it's a USD Swiss franc, the USD currency was going down, okay? This could be shown in the dollar index in this particular moment. So when the dollar index is down, we can see that the dollar index, the dollar itself wasn't performing well, okay? So now it has hit a particular zone and now it's reversing, okay? So as you can see, at the end of a very nice trend, you will see base candle. Here we do have a pin bar and we had a very strong rally. What that really means is after that trend, you'll have price going to the upside to confirm that the trend is about to change. Now it's going to go in this particular range, okay, until it breaks this zone, okay? So it isn't making any significant lows, okay? So this itself was the low of the whole trend. And now where the price is trying to go back in this area, but it's not doing quite well. What it's also doing here in this particular zone is trying to get out, get some more momentum and go back, okay? So if you follow Wyckoff theory, okay, you'll understand this a lot more, okay? So if you go onto YouTube and look at more Wyckoff theory, you'll understand this a lot better. So price goes down, hits a particular area, price bounces back up. It then goes into a particular zone and ranges, and then it will get more momentum. And before the last momentum to the top side, it will go with quite aggression. So you should try and catch this, okay, when it goes to the top side. So let's now look at USD CAD, okay? USD CAD, okay, again, USD is the first bit, so the base currency, and the Canadian dollar is the counter currency or the quote currency. Price was rallying, as you can see clearly. Price was rallying. It has now hit a particular zone, so it's not going anything any more further. It has gone below the zone that it's supposed to. Trying to get out of the zone. But as you can see, it hasn't done so. So price itself, it's showing that it's trying to go to the top side, okay? So you can see price going up. But in this particular zone, you can see what we call a base. So what that really means is in supply and demand, okay, at the end of a trend, the first candle that goes up, okay, and if it's bullish and it engulfs the previous candle, okay, this is known as a demand zone, okay? So we'll have to see in the future, okay, how this demand zone sits. So price then rallied up a bit further, tried to go back to that zone, but couldn't. We then got another bullish momentum candle, which basically engulfed the previous one, and now it's going in the same direction. So it is confluencing with the dollar index that the price is about to rise. So if we now look at it compared to the other currencies, this is the Great British Pound versus the United States dollar. So the British Pound versus the dollar, okay? Price, so the base currency is the GBP and the USD is the counter quote currency. What you can see is price has gone down, then price has gone up. Now price has gone down. So what this really means to you and me is if the British pound was bullish, then the momentum would be to the British pound. However, price is now going down. So what that really means is the dollar is increasing in power. So as the dollar increases here, so the counter currency is going to the downtrend. So the Great British Pound would not be as strong here. This is shown quite very easily in this particular chart that price went up, then went down, then went up again. Now it's going further down, okay? It is showing you in this particular area that price made a supply zone, okay? What that really means is that all the sellers were here and now price is going to the downside, okay? So let's look at it from the Euro USD as well. Again, the Euro is the base currency, the US dollar is the counter or the quote currency. The Euro is falling, so that means the dollar is rising, okay? So as you can see clearly here, price went up, price went down, price went up again, Now price is going down. So that means that the euro is weakening and the dollar is gaining strength. So when you are trading the Forex market, make sure you first of all understand the dollar index. If the dollar index is rising, so if the dollar index strengthens, all other pairs will start to weaken. If the dollar index basically weakens, you're going to see a rise in price of most of the other pairs. Okay, so once this gets into your repertoire, you'll get to see a lot better trades. You'll also see how to understand the market itself, and then you'll see that your mindset will be changed in due action as well. So that'll be for today. If you do have any comments, do let me know. If you haven't subscribed, do subscribe to my channel, and that'll be it for today.